Okay, good morning, everyone. Thanks very much for joining us today. Today we have an expert panel for you who are going to talk all things funding. So we're going to cover the Future Fund, the discretionary funding that's just been announced by government that will be issued by local authorities, and also we will take a quick look at other types of funding that the government have announced recently. The government have obviously had to announce a lot of stuff at lightning speed. The devil has very much been in the detail, and unfortunately, a lot of the announcements have been very short on detail. We don't have all the answers, but what hopefully we do have is people who can give you a bit more of an idea of what to expect, and also the kind of things that we're all currently lobbying very hard for on your behalf. So first up, we have Dom Hallas, who is the Executive Director of the Coalition for the Digital Economy. He spends most of his time lobbying government on behalf of startups and scale-ups in the UK, and actually was possibly the main driving force behind getting the Future Fund off the ground and making government aware that there was a real risk to our startups and scale-ups if something didn't happen. So I'm going to hand you over to him without further ado, and he's going to give you a bit more information. Dom.
Thanks, Katie. Thanks very much. I'm just going to share my screen because I'm going to run through a deck for you guys. 1 second. This is one we made earlier. Can everybody see that? Can I just check that we're visible? Katie, can you see that?
Not yet, Dom.
Okay. All right. Hang on. Let me work out what's going on. The joys of technology and all that. Okay. Hang on. See if we're working now. Okay, I can't. Katie, I don't know whether the screen sharing is working, but I can just walk through what I was going to.
It isn't yet. Have you clicked the third button at the bottom?
Yeah, I did. Yeah, and
right.
I don't think it's worked. So
okay,
let me. I'll give it another go, but then I'll just walk through it because I don't think
okay.
Talk to it anyway, so it's not a massive problem. Yeah. Okay. So. First of all, thanks very much for having us. My name's Dom Hallas. I'm the Executive Director of Codec. First of all, what is Codec? Who are we? What do we do? Codec is short for the Coalition for a Digital Economy, and so we're a lobby group for tech startups and scale-ups in the UK. So I spend the vast majority of my time talking to policymakers, talking to politicians, talking to basically whoever will listen about how we improve public policy for startups in the United Kingdom, specifically tech startups. So we've been founded in 2010, around for 10 years now, founded by entrepreneurs, for entrepreneurs, and really focused across 3 main issues. That's access to talent, so immigration policy and skills policy; access to finance, so how do we incentivize people to create businesses and then encourage people to scale businesses; and then tech regulation, everything from data protection to online harms to the AI strategy, and anything and everywhere in between, whatever the government rustles up on digital policy. So, of course, the sort of primary focus of our work over the past 2 months has been a response to the coronavirus and what startups need during this crisis. And so, broadly speaking, that's been focused around a couple of things. The first is, which we'll be talking about today, is liquidity and access to cash, and then a range of other issues that are sort of more specific, but ultimately relate to the broader downturn that we've seen. There are sort of 2 ways to tell a story of the downturn. One is in the data, where you can see data from Bohurst, which shows investment in startups was down 32% in Q1 this year. Obviously, that's Q1 that was impacted at the end of Q1, not throughout. So we're fairly certain that there's a huge impact. Or in the stories, and I have a bunch of stories in my inbox from founders who have had term sheets pulled, or their investors have disappeared, or some who've been through due diligence and then their investors have disappeared, because we know that the investment climate has fundamentally changed, and so we have to be really cognizant of that as we look at what support is available. And so the initial government support package for a broader range of businesses, not specifically tech startups, which was the CBILS scheme, so the Coronavirus Business Interruption Loan Scheme, the Business Rates Grant Scheme, which has been updated now, but at the time was limited to people who paid business rates, and the furlough scheme, or the CJRS, the Coronavirus Job Retention Scheme, simply wasn't sufficient for the businesses that you guys are running, like for a bunch of reasons, but the main one was that the CBILS scheme wasn't accessible to people who were defined as unviable businesses, but essentially were loss-making businesses. And so we know that the vast majority of startups in the tech space are structured around the idea that they raise external capital, that they continue to raise external capital, or even if you're bootstrapping, you'll still be spending your capital in order to grow and scale. And so that was a fundamental challenge, which is why we were lobbying the government very hard from the sort of day one of post-budget, from virtually the 12th of March, which is the day after the budget, right through to create an additional package of support, something similar to what we've seen in other countries that can help the startup ecosystem through this period. So what they announced on the 18th of April was two main things. The first is the Future Fund, which I'll talk about in a bit more detail, and the second is some more funding from Innovate UK. So the Future Fund is a £250 million government fund to be run through the BBB that will that will invest on a one-to-one match basis with private investors in convertible loan notes in companies that would convert into equity after a defined period. The way in which that is structured means you have to raise £250,000 of external funding. And the expectation is that in terms of details, and I can talk a lot, I know we're going to have a lot of specific questions about this, so I don't want to go into it in too much detail now. We'll see the details of exactly what that looks like beyond the loan note document itself, which has been published hopefully in the next week or two. There's sort of four broad questions that I've been doing a lot of these webinars, and there's four broad kind of questions about the Future Fund, which I want to address quickly, and then I'm sure that we'll have a lot of different discussions. So four broad critiques, shall we say. So the first is that 250 million of government funding is not enough, that it's too small. The first thing to say to that is we completely agree. I think we're optimistic that if the government if we reach that limit, that the government will consider putting in more money. The blunt reality is that we would rather have a scheme that had a small amount of cash and spent it all and was deemed a success, compared to something like the CBILS scheme, which has a huge amount of money, 330 billion in loan guarantees, but can't actually get the money out of the door. So we're optimistic that that can be resolved in the longer run, but we completely agree that 250 million pounds is probably not enough cash to cover everything. The second is that it's not EIS compliant. Again, we completely agree this is a gigantic challenge. We've been lobbying the government from day one to make it EIS compliant, and we know that that's still very much an open conversation. It's still under discussion with the government. So ultimately, for the time being, that hasn't been resolved either way. So I would wait and see. We're waiting more information, and we should get clarity on that particular point at the moment. We realise the loan note documents that are out there aren't specifically addressing the question one way or another, but the way in which they would be interpreted suggests that it wouldn't be EIS compliant. But the reality is that's still an open conversation. The government's working on ways in which they can resolve that problem. The sort of third point is around that the 250 minimum raise threshold, the 250k minimum raise threshold is too high. It cuts out too many businesses, and we completely agree with this. We'll be honest. We were asking for a lower threshold. We thought it should start at £100,000. The reality is that is where the government chose to set it. That wouldn't have been our preference, but I can talk a little bit about what other options will be available to businesses that fall under that threshold. And then the fourth thing, and I think this is where I depart a little bit from the broader challenges to the scheme, is that we've heard a bunch of entrepreneurs say the terms themselves are a little bit too onerous. So the 20% discount, the 8% interest, and the honest answer is that first of all, they're punchy terms, but they're not out of the realm of possibility. And the second thing is, to be blunt about it, the polite way of putting this is that people have to realize that this is supposed to be money of last resort. The reality is, like, the government is trying to provide a backstop. So if you can seek and get external capital on better terms than the government is offering, you absolutely should do so. You should go out and raise money. Like, if you have investors who are providing capital or willing to provide capital on better terms, please do go and take it. This scheme is not designed for you. It is designed for people who will not be able to access capital unless the government is providing matching funding. So, like, that's the basis on which it's operating. And, you know, we're operating in a crisis, and we appreciate that is how it's structured. So that's the kind of the broad brush. So therefore, it's sort of suitable for seed stage businesses and beyond who've raised that £250,000 of external financing, and sort of designed to help those companies in that cohort that are loss making, that you know, wouldn't have been able to access the other schemes. But we realise it's sort of unsuitable for bootstrap companies and for super early stage loss making or pre-revenue companies that won't be able to access cash. So what are the alternatives? There's sort of two alternatives. The first is the bounce back loan scheme. So the new scheme that launched last Monday, but it allows companies to access loans worth up to 25% of your turnover, up to a maximum of £50,000, which is 100% government guaranteed, so that the lenders lend much quicker, and they have been doing so. We've seen more than, I think, 6 billion of loans so far through that program. And the point is that for bootstrapped companies who have revenue, or, you know, early stage profit generating companies, that's an appropriate route to go. Obviously, it depends on you having sufficient turnover, where 25% of your turnover would help you survive through this period. So then for companies that don't fall into that category, for loss-making or pre-revenue companies, particularly R&D intensive ones, the Innovate UK funding is probably the best option. So there's £750 million of funding, 200 million of which is accelerating payments to existing Innovate UK customers, but 550 million of which is fresh funding for new people who haven't had Innovate funding so far, and then some more for existing programs that will need additional top-ups. And we should have more detail on exactly what that looks like in the coming couple of weeks. But again, like, that's hopefully suitable for R&D intensive, super early stage, loss-making or pre-revenue companies. And then I should add, and I know that Katie mentioned it briefly, there's obviously then a conversation around exactly how the support from local government will come. The business rates grant scheme, which has been extended, an extra £600+ million has been topped up to focus specifically on companies in, for example, places like co-working spaces, where you don't pay business rates directly, you pay a membership to the co-working space, and you hadn't necessarily been identified. And so we're waiting a little bit to hear exactly how that scheme is going to be administered, because ultimately, you know, the councils have typically had a list of ratepayers, and the idea was that they would identify them themselves. It's obviously much harder to do that when you don't necessarily pay rates. So that's a question then about exactly how that would operate. But that's a broad perspective. I hope that's useful, and I'm more than happy, along with Dave, to take any questions as we go. Thanks very much.
Thanks, Dom. So we're going to save questions till the end. Unfortunately, we haven't been able to make the tech work. Hopin seems to be full of gremlins this morning. So Angela Harrington from Manchester City Council won't be joining, but she has put a quick message in to say that they are still waiting for guidance from government on the new discretionary spend scheme for SMEs. I know that MCC have got some quite innovative thinking around how that proposal is going to work, and they are very, very keen to support as many small digital and technology businesses as they can. So hopefully I can share that with you in the next week or so. Our next speaker is Dave Furlong. So Dave is a highly experienced banking, venture capital and private equity professional. He recently led the Northwest equity component of the Powerhouse Investment Fund on behalf of Maven, and he's going to share a few thoughts with you about some of the government funding, but can also give us a bit of an insight into the investor landscape and how that's changed, as Dom briefly mentioned. So over to you, Dave.
Thanks, Katie. Really appreciate it. And I apologise in advance for the backdrop here. Unfortunately, due to parental responsibilities, I'm out in the office outside, which sadly has a lot of my toys in it, so I apologise for that. In terms of what I was going to talk about, it's not going to be a particularly lengthy chat, really. It's more looking from an investor point of view, and more recently as a consultant working with companies that are seeking to raise capital, really about the kinds of things that you need to be kind of doing and preparing for in the context of both, you know, what is actually a reasonably rapidly evolving kind of public or kind of quasi-governmental funding environment, and also just the wider investor horizon, you know, investor kind of circumstances at the moment, where there's quite a lot of uncertainty clearly about where appetite at each individual firm sits. But to give you some overviews about the kinds of things that you need to be thinking about, the kinds of approaches I would suggest that you adopt. I have a hard stop at 11 o'clock this morning, so can answer questions until then. But I've put my email address in the chat room there. If anybody'd like to speak after 11 o'clock, more than happy to speak to you privately just about, you know, views and any questions that you have about any of this stuff. I should also say I'm not an expert on the government schemes, but I'm working with a number of companies that are applying to them, and was doing exactly the same when I was at Maven Capital Partners as part of the Northern Powerhouse Fund as well. So, you know, my view overall will be on the generic, but any specific questions, happy to answer those. So I guess, look, the main thing to say is that despite the fact that the COVID situation has clearly impacted, you know, the availability and kind of predictability of availability of funding for companies at the earliest stage, or those that are most affected by COVID and the kind of economic consequences of it, in truth, there are a lot of firms and there are a lot of groups of angels, there are a lot of high net worths who still have cash to deploy. So my first point would be is to not be too disheartened about whether you fit into one of the government schemes or not, or can make one of them work for you. The truth is there is a pool of available private cash out there too, and funding deals that are both closing that started pre this crisis and have begun since the crisis began, where investment is being put in, and that is both institutionally and also as kind of groups of high net worth. So my first thing would be is not to be too despondent or to be too cynical about what is out there. Now, the major challenge for both you guys as entrepreneurs and as founders of businesses, or kind of leaders of businesses that are seeking to deal with the current challenges that we're facing, is essentially planning is everything, to try and prepare and be as honest as possible in terms of what exactly the business will need. And recognizing that is challenging at the moment because we don't know how long this is going to last, how deep, or in what way over a prolonged period the impacts are going to be felt. But my first point would be to approach investors or lenders honestly about what the range of possible outcomes is. So recognizing that nobody can forecast particularly accurately like right now, it's to try and forecast based on a wide range of potential possible outcomes, to try and see what the overall funding need may be, and to try where possible to at least put in place rudimentary strategies to deal with each of those potential outcomes. One of the biggest challenges that a lot of funders are going to have in this kind of world now, whether it's governmental programs or otherwise, is understanding really what the ask actually is. It may well look like it might be £300,000 or £500,000, but in truth, if things don't go quite to plan, it may be an awful lot more than that. And if so, what is the plan to deal with that request? So it's to try and be flexible in thinking, open and honest about it. What I would also say is to try along each of these lines to speak to as many investors or potential investors or lenders as possible. The truth is that there are, outside of these governmental programs, there are a lot of active networks trying to pull together opportunities to work with high value companies or high potential companies that simply require a steadying hand, perhaps a non-exec type involvement to try and help deal with this difficult situation, or simply to deploy cash into businesses that have been placed into this difficult and challenging scenario. So my overarching view would be speak to as many potential providers as humanly possible, because it's through kissing a lot of frogs that you may find the right solution for you. In terms of kind of preparing, I think that the key thing is to try and understand what exactly it is you're looking for. Is it simply short-term bridging capital, or are you looking for something more long-term, helping not just with providing a checkbook, but perhaps a source of kind of support and additional management resource coming into the business along the way to try and help through. That will also help you narrow down what your ideal list of potential possible outcomes or scenarios or potential routes to financing may well be. The other point is to be flexible. So you may well address the market thinking that you need debt, or you may go thinking you need equity, but the important thing is to perhaps go in with an open mind, perhaps more than in the usual market opportunity or usual set of circumstances, and just to be open to conversations, perhaps in ways that initially you may not be immediately comfortable with. We're not in an age where there are going to be a million perfect solutions to any particular problem. So it's really about maintaining an open mind, and equally trying not to be too offended, perhaps, if you receive a lot of people saying, sorry, not one for me quite at this stage. You will always get that in any circumstance, and right now probably more than you would previously or in a normal set of circumstances. But through having those conversations, you will find potential future funders that will be important for you perhaps once this crisis is over, and you will increase your chances of having the number of conversations you need to have to find the right funder for the time being. So essentially that was pretty much all I was going to say at this stage. It was principally to say, try not to be too despondent, seek advice, speak to people that you know in the industry, speak to your network to try and find potential routes through. And I'm very happy to take any questions or help as best I can after this webinar today to try and support you all. So thank you.
Thank you, Dave. If you can both unmute yourselves for the Q&A, that would be really helpful. So we've had quite a lot of questions. Just before we plunge headlong into those, just to say we've set up a number of polls. So if at some point you could click on those polls and answer them, that would be really, really helpful. As the more market intelligence we can gather, the better. And at the end of the Q&A, when if you look to the left of your screen, you will see a networking button. So after we finish Q&A, if you want to hit the networking, you will be able to carry on conversations with peers, and obviously discuss this or any other aspect of the Future Fund with each other. So on to the questions. We have a two-parter, which is from Alan and Glenn. Could the qualifying conversion event to equity occur within a couple of weeks of initial drawdown? And if the qualifying conversion event can happen a couple of weeks after drawdown, what happens to the 8% interest that is otherwise payable over 3 years?
So let me, if I understand, the fundamental question is, could you convert within a few weeks of receiving the capital? Is that the basic gist? I mean, like, as far as I know, and my understanding based on conversations with the government, there is no inherent reason why that couldn't happen. The reality, and I think that the tricky balance, and it ultimately comes down to exactly the eligibility criteria the government will outline in more detail, is like the purpose of the exercise here is to encourage additional funding into the market that wouldn't have existed anyway. So I mean, it ultimately come down to their interpretation of, you know, if you're planning on raising an external round within 2 weeks and that's clear, then there'll be a question of whether or not you should be getting the capital in the first place, if that makes sense. But there is no inherent rules-based reason, based on my understanding, that would be prevented.
And that's exactly the same answer that I would give as well. I mean, I'm working with a company that is intending to try and use the program where there is a further round coming, hopefully relatively soon down the road. So we're working very much on the basis, while we're waiting for information to come through finally from government, as the position fully crystallizes, we're working on the assumption that yes, those kind of conversion can happen relatively soon, so long. And if that was the case, that the terms would remain in place, but that equally the coupon, for example, would simply be on a daily basis to the point at which the conversion.
Yeah. Okay. Another question is, and I don't think we have enough information for this, but what limited warranties and covenants will startups have to provide?
Yeah, so I mean, a lot of like when we get into the specific, so one thing I should say just as a general comment is, like, obviously the interpretation of the conversations thus far are largely based on the convertible loan note document that the government published when they announced the scheme on the 18th of April. The reality is that even that document is subject to change. So, like, as in, you know, there probably won't be substantial changes from that document, and we can hopefully provide a little bit of information on where we think, like I said, I think there's a conversation ongoing about EIS, but the reality is that, for example, the terms of the matching investment will probably have to be pretty similar to what the government has outlined. But ultimately there is, you know, there are going to be a lot of open questions. And so a lot of the kind of very specific what exactly information, what information will be needed for applications. All of these are still open, and they will be until the government announces more details. We've been hoping that would be this week. It might be next week, but it will be in what has been described to me by the Treasury as the middle of May. So make of that what you will. But more information is coming very soon, and on a bunch of questions, including some of the specific details like that.
Okay, so that should be kind of like 4 or 5 days for the middle of May then.
Yeah, well,
see if that happens.
Yeah, it's like how long's a piece of string? How long's the middle of May? I don't know.
Okay, so we have a scenario here from Gareth Peterson. So we've had almost £2 million of investment.
In your music.
Sorry, that's my Siri answering that question. We've had almost £2 million of investment, but largely from our directors. Only 170k is external. Do we qualify? If not, then could we get some further external funding to make us eligible and then apply?
Yeah, so the basic answer, I mean, unless I see more detail in the specific circumstances, that you probably don't qualify at the moment. Like in terms of the ultimately it will depend on exactly how they define external funding, and that's still to be discussed. In terms of whether you could get further funding, again, that's that's being agreed as part of the eligibility criteria. My understanding is that will be a cutoff from the government, but I don't know when that cutoff exactly will be. So it might be that there is a cutoff in a month's time, in which case theoretically you could raise additional financing in the meantime and then qualify. But it may well be, and my understanding based on my conversations with the Treasury and others, is that it's likely that cutoff is set at when the scheme was announced, in which case, but ultimately if it's when the scheme opens, then it could be, it could be in a month's time. I don't like, or whenever the actual scheme opens for applications, which is probably actually a bit sooner than that. So I think it basically depends on exactly how they craft that eligibility as to whether or not you'd be able to do that.
Agreed.
Okay, and we have somebody who is a pre-revenue company, Rajib. He's raised 330k from crowdfunding. Are you eligible or not for the Future Fund if you've used crowdfunding?
Yeah, so we would expect that crowdfunding would be considered eligible.
Yeah, that would be the working assumption I had as well. I mean, it's genuine risk-based funding from the from going out seeking high-risk investment for an early-stage company. So that sounds exactly like kind of entrepreneurial capital that you would expect to qualify for me.
And we should add, like, we're expecting that crowdfunding could also be used as a matching investment as well. But we're waiting on the specifics of how that would operate.
Yeah.
Okay. So also another question from Monica. They have also raised from a crowdfunding platform, but they want to know that will non-UK banks or funding from non-UK banks be considered, will make them eligible. Sorry, I'm struggling to get my words out. Basically, if they've got funding from a non-UK bank, will they still be eligible?
Yeah, so that non-UK investors should be eligible. There shouldn't be an issue there at all. If anything, it will actually be easier on the terms that are currently structured. It will in many ways be easier for you to get non-UK investment because they're less likely, for example, to rely on EIS, depending on whether or not EIS gets resolved one way or the other. But there's no expectation that it would be closed off to external investment from outside the UK. In fact, that will be encouraged. I think, and the sort of second part to her question, which is what about angel investors? Like ultimately, there is no restriction on the ability of angel investors to access the scheme. There will be some line drawn around what counts as an eligible matching investor by the government. It's not clear exactly where this will land, but my understanding is that they're trying to address what the Treasury call the rich uncle problem, which is, ultimately like part of the purpose of having the matching investment is so that the government won't have to do the same level of due diligence on the from the BBB end on like providing the matching funding, which will speed up the process. But obviously that requires a sort of credible quote unquote matching investor. And so like ultimately there will be a bar somewhere, but the expectation will be that angels in general will be able to access the scheme as a matching investor. The question then comes down to how many will do so if it's not EIS eligible. But again, we're working on the ability to make it EIS eligible. So I realize that was a bit of a garbled answer, but there you go.
Dave, have you got anything to?
And that is if it passes the kind of sniff test yourself, if it feels like genuine investment, whatever the source of that is, so long as it's not something particularly unusual. If it passes the make sense test for yourself as a team, then I would expect when the government kind of guidelines are fully published, I would imagine it would be caught, because quite frankly, the whole idea of having co-investment in is to try and prove that there is not just one view of viability, there are more than one. If you have a number of investors seeing the same information and reaching the same conclusion, that's an indication that there is really genuinely something there that is to be supported and encouraged and nurtured. So from my perspective, I would be very surprised if there are particularly onerous conditions placed around what that investment needs to look like, so long as it is genuine and at face value and kind of arm's length, I would imagine.
Okay, just another point of clarity. Does internal funding include directors' loans or their own convertible notes?
Yeah, so again, I mean, I think a lot of the specifics of what will count as external or other funding will be defined. I mean, I think that the basic answer is, like, if it's structured and it's fundamentally your cash or direct to the business cash, I think it'll be very unlikely to be seen as external funding. But like, we'll wait and see what the specifics allow and what they don't.
Correct.
Okay, and then Elaine has asked, if you've already invested your own money, are you eligible? And I know this is a concern for a lot of bootstrapped companies.
Yeah, so I mean, the basic answer is, look, like, you would be eligible if you also raised £250,000 of external investment. Like, ultimately, it comes down, for the specifics of the future fund, it will be, have you raised the external investment? If you have, then you would be eligible. If it's the case that you've that your business is funded wholly by yourself, the reality is you aren't. And I think that's why we're trying to steer, particularly bootstrap businesses, where you're just more likely to have revenue as well. For example, there are actually just much more suitable. Like, frankly, this scheme isn't suitable for you, so like you're going to have to go somewhere else.
Okay, so we've had a few more questions coming in. So the scheme is anticipating you go via convertible loan, but businesses under stress are better to get equity. I have investors that are prepared to support with equity, but only if the government supports with equity. Why does it have to start as a loan?
Yeah, no, so this is a really good question. I mean, I think that the basic answer is we're not sure why it does either, because that's not what we proposed. But like, I think what we had proposed originally, to be totally candid about the way in which we operated at Codec, was like, we were discussing a convertible instrument with the government, but it was much more likely to either be an ASA or a SAFE instrument, so that it was an immediate convert into equity, because obviously it would make it A, more likely to be AS eligible, and there'll be a better structure, but B, we don't see any reason why there should be a loan. I think the point is that actually the way in which the node is structured at the moment is designed entirely so that it does convert into equity. The reality is that actually, like, there is a heavy penalty for any company that wishes to repay this loan. And so the whole point is, like, the government expects the vast majority of this to convert, and indeed they need it to, because that is how they've designed the scheme from their own financial perspective. So I think there's a kind of reality that this can be seen as a fairly typical, the way in which this is designed will ultimately result in converts. And so, like, ultimately, if you're an investor willing to invest on that basis, then you can do. I mean, the reason why it wasn't designed as a typical kind of price round is because it's extremely hard to price these companies during a pandemic, and it's really difficult, especially for the government, to get into the business of pricing these companies during a pandemic. So what you're doing is you're relying on investors to do so, and then assuming that they're making that decision correctly, whereas obviously the whole point of a convertible is that you can get around that problem for the period of the pandemic and then price the company afterwards. So that's the fundamental reason why it was structured as a convertible, as opposed to, like, the reason why it was constructed as a convertible loan note is a separate discussion that we're not sure of the answer on. If I was to guess, it would be that the rest of the government packages have been designed as loans, and it sounded better to have it as a loan on the press release. But that would not have been my preference.
And I'd agree with that. I mean, whichever way you look at it, this is very much an equity instrument, whether it's structured as a loan, convertible, or otherwise. The fact is, the fact you have a 100% redemption premium on repayment tells you government will lock in a minimum 2x. So it's clearly an equity-like item. So why on earth it can't have been structured that if you can go straight to ordinary or preferred equity, for example, rather than having this first step of a convertible loan note first? I really don't understand that, to be blunt.
Yeah, and I think that so if I was to, again, like, I think there's a combination of things. Like I said, I think that part of that was the presentation. I also think that my understanding is, like, there's a sort of separate conversation on behalf of particularly the kind of the scale up sector that will also be able to access a lot of this, and ultimately, the government max matching goes up to £5 million, around the concerns of having the government on the balance sheet. And so the idea that actually for companies, even if the redemption premium is very high, that they could buy the government out and not have them on the balance sheet at all, is like an option that I think that it was perceived that companies would want available to them. But actually, in my opinion, I don't think it is massively helpful. But that's the way it's landed.
Great.
Okay. Mehdi, you'd asked a question about starting and closing a crowdfunding round before the FF applications opened. I think Dom kind of answered that when he said this very much depends on whether government decide to put the cut-off period. So they might decide you've got a month from now to raise more funding, or they might make it immediate. So I think it is really just waiting for hopefully that guidance that comes out in the next week for clarity around that.
But I would say in the round though, Kate, and to maybe more generally, whatever you're doing right now, you should be having multiple conversations starting as soon as you can with as many potential sources as possible. And as things unfold, be seeking to pull together a collection of solutions where you can. But, you shouldn't preclude yourself from starting one thing now thinking it might stop you from doing something else in the future, because any particular strand you're following for the here and now can be pulled or tweaked if you need to in response to everything else. I mean, what I would say is don't wait too long. I would say start conversations as early as possible, whether crowdfunding or other, to at least give yourself as many options, as many avenues, and to keep as many of those open at any one moment in time as you can.
Okay, we have a question from Monica, and I'm slightly worried that this is going to be a bit like if you type Google into Google, it'll break the internet, because we're getting into two government schemes here. So if a company has received support via CBILS, well done if you've managed to get CBILS. Are they still eligible for the Future Fund? Yeah,
no, that's a really important question, and I'll give the same answer as I will also give for the bounce back loans, which I'm sure for some it will be relevant. The honest answer is that we're awaiting clarification on this, and I think it's a really, really important issue. It's something that I discussed with the Treasury last week when the bounce back loan scheme was announced, because actually I think it's more likely that a bunch of companies will want to access that. I mean, I think that. I don't know about eligibility yet. We'll wait and see. But one thing I would sort of add, I mean, the scheme is simply it's not really designed for companies that will also access the CBILS. Like, we have to be honest about that. So it might be that theoretically you could, but in practice, that should be discouraged. I think there's a separate conversation about whether or not they would access the bounce back loans, which are a slightly earlier stage product. But again, we'll be really clear when we get answers on that question. I imagine that we'll probably get answers on them once the documentation comes through on the specific details of the broader, the broader details from the government. But that kind of, if you get government support from one package, whether that be CBILS or the bounce back loans or Innovate UK, can you not get it from another is really important. But we don't yet have clarification on that, because ultimately it often comes down to how these are being defined under state aid rules, and there's a lot of kind of detail that goes into it, and we're waiting for information from the Treasury on that.
Yeah, I mean, I know certainly there is at least comment made in the discussions around, or the government guidance around bounce back loans at the moment, that imply that if you've applied under another scheme, you can convert any approved loan under another scheme into a bounce back loan if you also qualify for that too. But in truth, I can't see there are going to be many situations where that would actually be the case. But on the Future Fund piece, I mean, rationally on the one hand, they're kind of like dealing with different elements of the capital structure, aren't they? One is purely debt. So for CBILS, you need to be able to evidence debt restructure, debt repayment, and serviceability. Whereas Future Fund is much more equity need. Perhaps where there is a genuine cash-consuming element to the business that perhaps means debt isn't necessarily appropriate. So rationally, you might be able to fit two together, but I can't really see, because either rationally the business can service a debt-like item, at which point CBILS seems like the most sensible, or it cannot, at which point Future Fund might be the right option.
Yeah, I think that that's absolutely right. Like the first thing to say is the Future Fund and the other kind of startup package support, so the Future Fund and the Innovate UK money. It's just worth pointing out, a key argument that ultimately resulted in that happening was the idea that businesses couldn't access the CBILS. And that's that these companies just weren't able to access it. So it's been designed on that basis. And I think there's there's a sort of separate question then about the bounce back loans, which are slightly different and more accessible to the companies in this cohort, and also come with additional state aid challenges because they're 100% guaranteed as opposed to 80% guaranteed. So there will be crossover, and so just we're awaiting information on that. But the reality is, to be honest, if you can access the CBIL scheme, and you're getting money from it, then great, go ahead and get it. That's I think there's a kind of, if I had one message more broadly about this support, it's you've kind of, you've got to eat what's on your plate. As in, there's a reality of if something is accessible to you, you can't wait for the perfect solution right now. As Dave said, you've got to be talking to as many potential avenues for additional funding as possible if you need it, and you've got to access the government schemes where possible if you need it. And there isn't sense in waiting for the perfect solution, because I can promise you it's not going to come.
Correct. That may well mean, accepting at this moment in time terms that you might otherwise wish to try and avoid, and that is not opportunism on behalf of the funders that are coming in. It's a genuine reflection of the situation. I mean, the fact that any investor, whether it's governmental or otherwise, investing in businesses in this current climate, there is heightened risk, and so there needs to be kind of an adjustment of the terms that go with that. But hopefully, through conversations, as Dom has suggested, you'll be able to find hopefully the best fit for you.
Okay, thank you. Just for final clarity, any external funding raised earlier under EIS scheme, that is not considered eligible matching for the future fund. Or
no, that will count. I mean, there's so the point is, when you say matching external funding, there's two separate things. There's a question about, have you raised £250,000 of external financing and therefore you qualify for the scheme? And so that is just to qualify, and then you will still need to go and seek external matching funding for the government's match. So you will have, say you're a company and you've raised £300,000 of external financing, you have qualified, great, rubber stamp. And then there's a separate conversation, which is, okay, you need to go and find an additional at least £125,000, which is the minimum match for the government, but between 125 and £5 million of external financing from somewhere else, from a private investor, that can then be matched by the government through this instrument. That's how the scheme works.
Okay, thank you very much. And Roy Friedland is mentioning that all of those schemes are subject to state aid rules, which I think is pretty much the case for most government funding.
Yes, so I can talk a little bit about the specifics of I mean, there is undoubtedly a challenge under what's called the undertaking and difficulty test. That is the way in which the EU state aid competition was structured. There is the future fund itself is attempting to be designed to avoid state aid challenges. There's been a lot of, and that this actually comes with a lot of the trade-offs around things like EIS and others. The reality is it's whether it falls under one bucket of state aid definition or another, and it becomes quite complex. The reality is that the vast majority of this government support will fall under state aid rules, because it is state aid, as in it is the government propping up these companies. And so the European Union competition structures ultimately, as defined, would cause challenges for companies who are defined as an undertaking in difficulty under that situation. I mean, I think that we understand, and a lot of the conversations I've had with Treasury and elsewhere has been there working to be as flexible as possible under these circumstances. I know, because I've had a lot of conversations with our umbrella organisation in Brussels and with some people in the European Commission about how flexible the Commission themselves are being about what counts as state aid under these circumstances, and whether they'll allow national schemes that traditionally wouldn't be allowed, even if technically the definition hasn't changed. They're being a bit more flexible, but ultimately, being really clear and checking in on what the criteria are that exist on whether or not you're suitable is really, really important. And one of the things we've been asking the government to do with the fund, with the bounce back loans, with Innovate UK, with everything, is be really, really clear and transparent about what the criteria are going to be, so that you don't waste your time on something you will not be able to access. And so that's going to be super, super important. And so we would encourage you to do so.
And what I would say on criteria, sometimes the regime changes. So you take undertaking, the state aid rules change at the point at which you would pass 7 years from your first commercial sale. So the regime is different if you're within the first 7 years versus if you're in year 8, 9, 10, etc. after your first commercial sale. What I would say is that you may prima facie potentially get yourself into some complications around undertaking and difficulty if you're over 7 years of age. But if you go and engage with a state aid advisor relatively early, there are legitimate things that you could potentially seek to explore in terms of your balance sheet to potentially make you eligible, genuinely in face value, genuinely eligible, not seeking to fudge, that you might need to kind of think about early on. But that's unfortunately for most cases, indeed, the undertaking cases, it's a genuine challenge and one that has long been the case. To be honest, it's an unintended consequence for these kind of funding schemes.
Yeah, and one thing I would say is because I like I said, to be totally transparent, we've had an awful lot of conversations with the government about the specifics of state aid and exactly how they operate in this context and what the challenges will be and how we can, for example, ensure that state-backed funds in the space are able to provide matching funding under the, because we know a lot of the 30-40% of venture capital in the United Kingdom comes from from public funding anyway. And so there are a lot of challenges here, but I think that a lot of this comes down to the willingness of the government to be a bit creative and sort of the polite way of putting it, as a state aid lawyer in Brussels put it to me, was, well, in order for state aid challenges to exist under schemes, it will come down to how willing someone is to bring a state aid case. And I think that actually what we're hoping is that the government, particularly with the way in which they design the Future Fund, will be a bit more flexible on the basis that, frankly, there's nobody who's going to bring a state aid case against these companies or against this structure, because usually state aid cases bizarrely don't fall from above. They don't fall from below the threshold, they fall from above. It's if you keep people out. And so actually you're more like we're hoping that they'll operate with a level of flexibility there, but ultimately the Treasury lawyers are the Treasury lawyers, and they're by their nature perhaps sensibly fairly small c conservative. And so we have to be sort of, again, I'd go back to the idea of you have to just take what's available, eat what's on your plate, and hopefully you'll get through this period.
Okay, thank you very much, Dom and Dave. I know Dave has to disappear off at 11, but hopefully I think we've basically drained Dom and Dave of as much information as we possibly can, and hopefully we'll have a bit more guidance coming out from government in the next few days, which probably will mean that we will have a lot more questions in the next few days. If Michael could just put a link to the MD Tech Community Slack channel, I'm very happy if anyone has more questions either now or in the future, to collate those and go and ask relevant bodies and people to answer those and give you further guidance. So if I could just ask you once again if you would fill in the polls, which is the second tab behind the chat on your screens. And then we are shortly going to move to networking. So if you look at the left of your screen, there is an icon of people shaking hands, although it's not immediately obvious that they're shaking hands. If you click on that, that will put you through to networking, and you will get a chance to meet your peers and possibly Dom if he can stay around for some of the one-to-ones. So please go forth and network. And thank you very, very much for joining us. And thanks once again to Dom and Dave for being fonts of knowledge in all things government and private funding. Thank you very much, guys.
Cheers, guys.
Thanks all. Happy to take questions as well over email. So thanks.
Yeah, likewise. My email's in the thing. I know Dave's is as well. So do just drop us a line if you need anything.
Thanks all.
Great. Thank you.
Bye.